Hi friends, so let's start today's analysis. Uh, See, as a snapshot, I thought probably it was not such a good day. It was pretty disappointment to me actually, I would say, and I'll give you the reasons why. Although the market closed pretty flat and Nifty Bank actually went up by around 200 points at the close, but I didn't like the market action due to some reasons. But we'll just discuss those reasons and we'll see what the future course of action, how the markets are looking like. So again, we'll start with the global markets and a lot is happening around the world, a lot of news flow. I mean, it is. I don't know how to digest these kind of continuous news flows, and it's going from one end to the other. And probably all the investors and all the all those people who are actually in the equity markets or whether they are into business, I don't know how decisions they will make, and probably it's some of the worst time anybody could have experienced into the capital markets as well as the business markets. Now, yesterday when we were closing, we had actually the Dow futures up by around 100 points, and I think Nasdaq futures were also up. But we saw actually a sharp decline in the US markets in the early session of the US, where actually the Dow went up to minus 700 points at one point of time, or let's say 720 points. And Nasdaq was also a similar 2% dip with around, let's say, 300 or 200 odd points down. In spite of Tesla doing very good yesterday after a 15% decline day before yesterday, still Nasdaq it was looking stronger. It was slightly outperforming, but still it went into red. The reason was that Mr. Trump actually increased the tariff on steel and aluminium to 50% instead of 25%, and he told it is effective from tomorrow onwards. Canada retaliated with a increase in electricity charges, means they have put around 25% tariff on the electricity they supply to US. Don't forget, we discussed some of the previous videos that 15 lakh homes in US, the electricity is given by Canada. So they in a retaliatory mode, or let's say to put pressure tactics, I don't know what was the purpose, but they told they'll be putting 25% on the tariff on the electricity, which is being sent to US. Trump did not like it. There was a whole UN cry. And then after the market closed, I think there was some talks between the two delegates of the two countries, and probably they found out some resolution. So none of the tariffs actually came into effect. But the problem is this kind of uncertainty, this kind of knee-jerk reactions, this kind of instant decisions without thinking here and there what can the impact, etc. Then I think if the world's most powerful nation and the most powerful leader is doing that, then there will be a stage of uncertainty. People will not do big investments going forward until unless you see a clarity of thought, clarity of policy, which I don't think till Mr. Trump is there in US, you will see some kind of big foreign investments. You will not see some large deals where a company of China, let's say, is buying a company of US, or let's say Indian companies trying to have a large deal with, let's say, so all those mergers and acquisitions, big mergers and acquisitions will not happen. All those big business investments will actually start to freeze because people will wait for the clarity, and even if the clarity comes, they know that there is no certainty that the things cannot get reversed. So we will be having probably a phase of very minimal investment in the next 3 to 4 years, and that is what the world is looking at, and that is not a good news because then you are, as a world as a whole, we're not growing, we're becoming stagnant, and if investments don't happen, then from where do you get the growth? That will be a problem. Whether Trump realizes this or not, he might be doing good for America, but it's not good for America. Take it from me, it is not good for America. So I think also the job numbers came yesterday. The job numbers probably was showing that the job openings are more than expected. So I think around 1 lakh openings plus came higher than what was expected. The market actually that gave a signal to the market that the economy is still strong, which means that the bond yields actually went up. It actually went up to around 4.27. It's slightly cooled off, but it's still hovering at those levels. So people still thought the economy is strong, and that is why those kind of jump we saw there on the bond yield. But the dollar index kept on sliding. Now we are at the dollar index of around 103.5 because large amount of money is pulling out of the US markets. The bigger investors, the bigger fund managers are no longer long on the US markets, and they cannot be because I think too much of things are happening around US, and that is why markets will remain jittery. Now, I think some 8 hours talk happened between between US and Ukraine, and I think Ukraine has given signals that if Russia is ready to have a ceasefire. We're ready to have a ceasefire, and probably settling down to a certain extent. And that's again a good news. With that news, Europe markets actually were resilient, and today they are up. They're also up because of other things also, because now they have put retaliatory tariffs on US on the steel and aluminum products which are being imported from US to Europe. So they have put 25% tariff, but they are effective from April onwards. That is why, because the local companies of Europe, they will get benefits. The European markets were up, and Nikkei was also up today. So I think Asian markets are pretty decent today. There was no harm, but US markets again yesterday closed in red. Dow closed around 400 points down, and Nasdaq also closed in red in spite of all those news things happening around us. Now, US markets probably have given up all the gains when Trump has come into the presidential seat. Most of the indexes now probably are in the correction territory. Nasdaq already is in correction territory. The Russell 2000, which is the broader index, which is covering most of the bigger companies, larger pool of companies, is into a correction territory. Probably it is sliding very fast to the bear phase as well. I think it is down by around 15-16%. So if it enters below 20%, we'll say it has entered into a bear phase. So Russell 2000, which is the broader index, is already facing the heat. And Dow also went into correction territory, and so has Nasdaq. So US markets, in spite of doing all that good, is getting into shambles. But one or two good things happened for America yesterday. America has told that for all the manufacturers who will open and produce in America, he will charge them only 15% corporate taxes. So I think their taxes rate on US is around 22%. So he'll give them a recession of around 7 to 8%. This was a part of his election agenda also, which he is now implementing now. So the reason why actually the people elected Mr. Trump was because of this reason. They wanted, because Trump has told that he will reduce the corporate taxes and the earnings will come to the US companies, and that is why the stock markets were up, etc. All those things. But all those things went into a backdrop, and suddenly this tariff war became into the forefront. That is why these US markets actually got nervous. But in spite of this news, the markets were not showing any resilience. They still closed in red. So, when you do some things on the negative side, markets actually start looking on the negative point rather than the positive points. So now market is actually getting feared on Trump's policies, on Trump decisions, his mindset, his tendency to take decisions very fast without seeing the impact. And when he gives statements like, I'm not worried in the markets, even if the country goes for recession, I don't worry. I am thinking about 100 years on America from down the line from here. So when people start listening to those kind of statements, they don't like a leader talking those kind of things. That means he's rash. He does not have a mental attitude to weigh his things, to measure his things, to measure his decisions, the impact, and then take a call. So when a person is reckless, when the person is too much out of ego, then probably market will never like it. So is the businessman of America. That's the reason why a majority of the brokerages in US are now negative on the US markets, and that is what is quite evident in the way markets are sliding in US, and also the way dollar index is behaving. So there are also many other news from the world, but I just want to stop it here, because then we discuss too much about global markets, and then we will talk less about the Indian markets. Now, so with all this background thing, uh, the HDFC Nifty was actually showing things in green. We were slightly in green today when we were opening up just before our pre-market session, but eventually we could not stay in green, and we went around 150 points or 160 points odd in red today. Well, that was not something which was good. That's what I didn't like today. There was no reason for our markets to fall. Even if yesterday's fight was going on between US and Canada, it is purely between US and Canada. There was no impact on India on that. Yes, there is a sentimental impact, but there is no direct impact on the Indian markets, whatever US and Canada are doing. So we shouldn't have reacted. And even when the news came that it is settling down and the tariffs are no more in place, then there was no again reason for us to go back to those levels of 22,300, 22,320 odd levels. We should not have broken 22,400, 22,450, even 22,500 should not have been broken. And we could not even close on above 22,500. So that's again a negative part. And this is when the Dow futures, after becoming neutral at one point of time, went up very sharply. And I think Nasdaq was not up. Nasdaq futures were up by around 180 points, and I think Dow futures were up by around 170 odd points. So considering those reactions in the futures market of US, There was no reason for us to close in red today, and that was something which was not it was troubling me in terms of the strength of the markets of India today. And a lot of call writing has happened on 22,500. I think the call writers are really heavy on 22,500. That's not again a good news. And from 550, 600, 700 levels, the call writers are absolutely heavy. We can see only call writing of 22,300 now, and a lot of call writing has happened 22,400, but 22,300 remains a support. So today was a good reason to actually go up. Even the F&O data of yesterday was good. We had buying in stock futures, we had buying in index futures. So all those datas, yesterday's market close, we actually went up. When we were closing, it was actually a good move last half an hour or so. But still, we could not sustain it and we went down. So I don't know whether it was last reaction going down to cover the shorts or not. The time will tell. But the market breadth and the market action was not good. Even the breadth was not good. Today, the small cap and mid cap, I think small cap was down around 1.2%, and I think mid cap was down around 0.6, 0.7%. So the broader indices were not good. The breadth was not good. We could not hold to the important levels. Even when the Dow futures were up, Europe market was up. So, and there was no bad news all around as such. So, in spite of that, if we're closing just negative, I didn't like it. And that is probably showing me that we still need some more strength into the hands of the buyers. So, that is not there still. So, are we still dependent too much on FIIs? We don't know. But the internal strength, the strength of our DII, the strength of our retail investors is just absent, absolutely absent. And today the numbers came for mutual funds, for and whatever SIPs, etc. That is also not so good. So we can say that probably in the SIP, if you say the figure has come around 25,800 crores or odd, which is down from 25,400 marginally. So we can say that in spite of having so much of turbulence in the markets, and let's say a bloodbath in the markets, still people are sticking on to their SIPs, but the number is down. We expect the Indian market players, participants, retailers to increase their SIPs at this point of time. We don't expect our retailers to decrease their SIPs. That's the worst part. When the markets are down, you should increase the SIPs, but that number actually went down, although marginally. Even the demat accounts, the SIP accounts, also, I think 52 lakhs have closed and we have added 44 lakhs. That is again a net dip. So again, not a good news for the markets as such, and at least for the participant as such. So overall, I didn't like these two, three things into the markets, and only those people who probably have now invested, only those people who have actually made their SIP accounts now, they will be the real gainers now. The people who have exited, they will only be in remorse, they will be saddened, and they will now try to enter when the market is going up, and then again fail, again occur losses. That's the worst part of investment. That when the markets are down, when the chips are down, you need to increase your SIP. You cannot stop your SIPs until unless you want the money urgently. So that was again one bad news which I didn't like at all in terms of our participants. But other than that, the dollar index is pretty benign now. Dollar bond deals are good, rupee, etc. All those crude and all those things, they all are now in a favorable zone to India. There are no negatives as such, and that is why we not talk too much on those parameters now, because they have come under control. We'll only speak about those parameters when we feel like they're crossing those levels where risk is emanating. As of now, there is no risk coming from any of the external factors, so we should not worry at all. Yes, Trump himself is a big danger. He's a person in danger. That's perfectly fine. But apart from that, the parameters are not looking dangerous. We'll not discuss too much on those things. It is pretty much the same. One more news came that Airtel and Jio both have made agreements with Starlink to give internet, fast internet onto the mobile. So let's say any other stuff. I would see this thing in two ways. One is I think India is bending down to US in terms of allowing US companies to work in India. Let's see if these one or two things, like I think America yesterday also, their I think Commerce Minister, the lady, she was doing a press conference yesterday, and I was just seeing the press conference. She again put up a paper and she was saying that no, India is charging too much on autos. How can you have 100% tariff? They're charging too much on alcohol. So I think these are the two pain points of Trump, probably, that they want these two things to be removed. So, anyways, whiskey we have solved. You allowed the Bourbon whiskey to come at only 25% tariff, 20% tariff now, 15% tariff now. That matter is resolved. I think cars also, it's a matter of time. I think we'll allow that cars to come into India. So probably India would like to, or probably India will come very close to solving the issues because we are agreeing to whatever US is saying. So if the other party agrees, then why there's a fight? And it's no more a negotiation. It's just that you're bending to the needs or to the demands of the other party. So that would happen in India. I think that should get resolved, and we should uh, those particular sectors will face the heat, but I think overall those things should get resolved. So the Starlink news I didn't like in that way, but in a way it is better that Starlink, if at all it would have come to India, it would have become a competitor to Airtel and Geo. Now he's not a competitor; he's probably an enabler. And good thing is probably the mobile penetration can happen much more faster because these are satellite-driven instruments and satellite-driven technology. So in the far off villages and the places where you cannot install towers or maintain towers, those remote places now you'll see internet. So the internet penetration, the internet breadth, and for the speed of internet, those all things will increase. So that can be a plus. I don't know what the revenue sharing model, profit sharing model. I'm not aware of all those things. But one thing is that India has bent down the needs of the Americans on this tariff kind of a thing. And one thing good is that instead of becoming competitor now, we are into an agreement of revenue sharing models. That's probably a better part in terms of things. Now, for the banks, again, one more good news was there that 50,000 crores more OMI will be done. Means open market operations, RBI will do it. So I think RBI has tightened their belts. They are absolutely on fire that whenever they will see a smallest liquidity negative on the balance sheets, they will go for OMA purchase. They are absolutely clear in the minds, which means liquidity is not a problem at all for our corporate people or for our banks as such to grow. That is solved. That problem RBI governor has taken to his stride that nothing of this sort will happen. So that's a fantastic news, and this thing will continue. The market is not taking this as a good thing. I don't know why. Probably the time will tell, but that's something very good because the choking of this liquidity actually resulted in that slowdown of our GDP numbers of last year quarter two, which came around 5.2% or 5.4%. Now, one more good thing which has come in just now, just 15 minutes before when we started the video, the retail inflation, the CPI inflation of India has come to 3.6%. Can you imagine? If you remember, if you recall my 2 or 3 videos before, I've told that the CPI inflation will come below 4%. And now it is, I was expecting 3.8. It has come 3.6%. So now you are lower than the band of your RBI's tolerance of 4%, which means April you will get one more rate cut for sure. Dollar index is down, rupee is stable, the inflation is 3.6%. It is sure that you're getting one more rate cut. Again, one more positive for Indians, for investments. I'm telling you, I'll keep on telling you all the positives. I don't know why the market is not behaving. That's not in my hands. But I'll just tell you why the markets cannot slip down from here. So, a 3.6% retail inflation, fantastic. Beautiful news, excellent news when the entire world is troubling. When the entire world is getting bothered because of inflation, India is a shining star with 6.5 GDP growth and inflation of 3.6%. The macros are phenomenal. You can't get these kind of fundamentals into an economy which is growing at 6.5%, 10% nominal GDP growth, and you are inflation of around just 3.6%. So that is excellent. Markets should realize this. I don't know because a lot of call writing has happened today on 20 to 500, 600, tomorrow is the expiry day. So if the FIs are able to manage the index, I can't say. But otherwise, the news is good enough to at least give you a 2 to 3% jump on Nifty with just this news because you're getting one more rate cut. The kind of liquidity push, the kind of the liquidity easing is happening into your economy. This is what you want to grow. That is how GDP grows. That is how your GDP will come from 6.5 to 7.5%, and you will see the fruits. And that is what I say very confidently. Nifty will not stop at 26,000 now. Nifty will probably go to 27,000, 28,000, and beyond. This bull market, which whenever it will start, it will go far, far away. The reason is because of this small bear market, a lot of actions have been taken by the government. We are given 1 lakh crore as a tax benefit. We are given one rate cut. Liquidity push has already been put around 2.5 lakh crores plus. We are already put on hold every norm which was holding the banks. Unsecured loans, we reduced the risk weightage. LCR norms were deferred for 1 year. We want the banking system to perform. The growth is the fundamental target of the government and the RBI now, which are controlling the fiscal and monetary policies of your country. The both two important bodies have just told to themselves, we want growth. So growth has to come. If your leaders think growth has to come, it will come, irrespective of what is happening around us. Because we are 85 to 90% driven by our own consumption driven economy. One more good thing happened. Our IAP production increase has come to 5% plus. It was 3.2% last month. People were expecting around 4% or so. We have beaten the estimates also, and we are far, far away from the last month numbers, which means that the January production have been higher, the churning of things have happened, the government spending has gone up, which means this quarter numbers will look good. That is why, if you remember, last 2 weeks before, the government people have told that we are predicting a GDP growth of 7.6% in this quarter. Now it is looking possible because the inflation has remained low, which means higher money into the hands of people, more consumption. The IIP production you are seeing as a good numbers. I think the numbers of this quarter will be far, far better than Q3. That is for sure. So if Q3 numbers are good, you know, and if you see the Nifty chart, if you go to screener, I don't have the chart right now, but if you go to the Nifty and you go to the screener, and if you try to find Q2 and Q3 variance in terms of earnings, the earnings growth has been 7%, which means from Q2 to Q3, the Nifty 50 companies have increased the earnings already by 7%. But the markets are down from Q2 levels also. The market is discounting too many things. We are not taking any good news into our stride. I don't know the reason why FIs are so negative, or probably they will start shifting their stance at some point of time. Whether it is March or April, I don't know. But it will start happening. So these two, again, very good news. We'll react to this tomorrow. And anyways, today I think we have CPI number from US also. Let's see how it comes. But I think we should not bother at all. Whatever the number comes from US, India should not bother. Even if we have gap down, chase it. We have gap up, there's nothing, no problem at all. Because India's story is looking absolutely fantastic. Yes, today's market action was very disappointing. I didn't like it because today there was every reason for us to cross those 22,600 first call writer zone. But we didn't do that. Actually, we were testing our own put writer zone. So that was not good at all. But anyways, the market is still in a range of 22,300, 22,800. It is stuck. It is absolutely stuck. So we wanted some kind of a news. I think the CPI inflation number, IIP number, okay, we will still ignore because these are, January numbers. We are already into March. But it is giving you an indication of better quarterly earnings for this quarter. That is what the market looks for. But the CPI inflation is a given. And now with this, we are looking for a rate cut in April. That's again a good news. How much market will cheer, I don't know. But the market structure, the market fundamentals, macros and micros are looking extremely good. But the market texture, the market Nifty and whatever the Nifty behavior is there, that is not looking good. Nifty IT was punished heavily today. Almost 4 to 4.2% down. So our IT index, which was trading at around 46,000 levels just 2 months before, is now down to 35,800 levels. Which is what? Approximately more than 20%, 25% cut. Which means IT index is now into a bear category. The index which our DIs was shouting again and again on TV or every channel or every platform that we are very bullish on IT, we want IT into our portfolio. Where are those people now? And that is why I say our DIs are always losers. They want to catch the knife when it is falling. They want to catch the knife which everybody has rejected. Now, when people are moving out of IT because of showing signs of some kind of degrowth in US, we have actually bought the IT companies on top, and now the investors will get stuck. Now our fund will get stuck, and that's the reason why our SIPs will still remain negative in spite of market moving up. So our DIs have to think. They don't imagine the markets in that good. They actually go by the flow. And now when the IT index will be making its bottom, our all DIs will become negative on IT. Right? Leave IT. We are not bullish on IT. We are IT, we are underweight, underweight, and underweight. And probably they will again go wrong because, again, I'm saying US economy on paper is not slowing down. The numbers which Atlanta Fed is showing of negative growth is because of more imports. Yes, consumer confidence has gone down, but it is still not negative. The consumer spending is still positive, so we cannot have negative growth in this quarter. Absolute numbers will still not be negative. And the kind of tax cut he has announced yesterday, he had a meeting with around 100 CEOs yesterday. And if he's giving confidence and if he's telling them that I'll give you a corporate tax cut if you're producing in America, I don't know whether they believe it on Trump or not, but mathematically, it is absolutely good for America. That means that economy cannot slow down. A person who's taking so much of pain to make America great again cannot allow the economy to go into doldrums. He cannot allow the economy to slip and go into recession. Whatever he says, he will not allow doing that. I think it will not happen also. But we are into a moderate growth for US now, as compared to India, which is now growing at 6.5% or plus. Moody's report also came today. Moody's have told that India would be growing at more than 6.5% in FY26. And if US is growing only at 1%, there's a 5.5% differential. And if we believe that stock market can only be a percentage to GDP, if we believe on that, Mr.'s a factor which we take about in terms of market capitalization GDP, if we believe on those factors, which Warren Buffett says, our friend, a great admirer, then if we are growing at 5.5% plus, how can our markets be not be growing and US markets be growing? It cannot happen. It cannot happen mathematically also, neither by any concept of any stock market. So that is good thing for us. Moody's also told that the banking sector is in good shape. Our numbers are looking good. Fiscal deficit is looking good. So I'll not go into all the details. Probably you can pull out that paper and study in detail. So these are all things happened today. So I was not happy with the texture of the market today, but overall, the news flow and the fundamentals again look good for India, which means we cannot go down. But since the texture is bad, we also cannot go up. We have to break the range sometime or the other. I hope it happens tomorrow, but since it is expiry day tomorrow, we have 3 days holidays now, and the call rating is too heavy on 500, 600, 700 levels. I don't expect that to happen tomorrow. But if it happens, then I think we have broken that range and we are set for a much bigger target on Nifty. Now the Nifty target will be much bigger. It will not respond. So with this, I'll end my analysis. I'll end my video today. I hope you would have liked it. Thank you so much.